Morgan Stanley says S&P could drop 26% in months. Strategists are warning the U.S. equities are becoming too expensive, which could cause the S&P 500 to slide by as much as 26% in the first half of 2023. This is not the year. This is first half, so June 30th. Recent data suggests that the U.S. economy might avoid a recession. However, it has also taken the possibility of a Federal Reserve pivot off the table, making it less optimistic for stocks. The sharp rally this year has made stocks the most expensive since 2007, according to the equity risk premium metric, which has entered the death zone. Morgan Stanley's Michael Wilson said that the risk-reward ratio for equities now is very poor. The Fed is still far from ending its monetary tightening. Interest rates are higher across the curve, and earnings expectations are still too high by 10 to 20%. Tom, what are your thoughts on the story?
Well, I think what you're seeing here is, I'll translate this into plain English. Morgan Stanley doesn't think that the economy is getting better and it's going to be represented by a market drop. In plain English, you could take a look at what happened just a day ago. The market, everybody see about a day ago, the market dropped 600-700 points, like in one afternoon. It was triggered by Home Depot, because Home Depot talks to home renovations. Also, there's a large percent of Home Depot earnings that come from when you buy a home, you get rugs, windows, drapes, paints, and you do a lot of stuff. New lawnmower, all these things. And Home Depot came out and said, yeah, fourth quarter wasn't that good, and we don't think 23 is going to be very good. At that moment is when the market dropped because they were really scared about what's happening in retail. Morgan Stanley is looking at it and saying, hey, you know what? This thing is fragile. How fragile? Home Depot makes an announcement by noon, and by the afternoon, you've lost 600-700 points. So what Morgan Stanley is saying is that the economy is more fragile, and they think there could be a real drop. And we just saw it live. Walmart came out that afternoon, too, with some kind of bad news. And there it is live for it. It's a very fragile economy. That's what they're saying. And they see it could drop 26%.
Adam, what do you think?
So this is Morgan Stanley, right? I'm going to use the, by the way, hi, everybody. Great to see everybody. Everyone, what a great-looking audience we have here. Holy moly. Yeah. Let's just give some credit to the audience. Our audience looks way better than I thought. Even you Trump supporters out there, you look way better than I thought. I think in the immortal words of Big Lebowski, Morgan Stanley, that's like just your opinion, man. So we see whether it's Goldman Sachs or Morgan Stanley or the big banks, the wirehouses or Credit Suisse or UBS, everyone has an opinion. If there's anything I've learned about the economy and the financial markets, nobody has a effing clue what's going to happen. I remember when COVID happened, and what was that, March of 20, right? And the economy tanked. And I'm in a group chat with all my buddies, and one works for Goldman Sachs. And we're all like, dude, like, what do you think? He's like, well, I actually sold all my equities a month prior. And we're all like, what the fuck? Tell us, dude, what happened? And what happened 6 months after that? The economy, the market bounced back tremendously. So I think what we've seen as far as by the way, how many people invest in the stock market here? Show of hands. So like the majority of the room. Who is like, no way, I don't mess with equities, I'm all real estate, commodities. All right, so a couple Biden voters out there, like a couple. But what we've consistently seen is anytime there's a bear market, which we just saw COVID exactly, a bull market follows right up after that, time after time after time. So at the end of the day, you have to figure out what your age and your asset allocation is. So the majority of this room, good-looking people, looks like in their 30s, 40s, 50s, maybe. Anybody retiring or like trying to pull out their 401k money anytime soon? I doubt it. So maybe you got to talk to your mom. Shout out to Vinny's mom in the house right there. Watch your 401k, mama. But if you're not pulling out of the market, if you're not selling, if your home equity goes down 20%, stock market goes down 20%, if you're not selling, it's called realized gains. I wouldn't necessarily be a concern. Maybe you have an asset allocation strategy to be a little bit more conservative, but this is not a major worry for me.
So if you like this clip and you want to watch another one, click right here. And if you want to watch the entire podcast, click right here.